So you've been cutting down on your spending, resisting the online sales, and even skipping out on $7 frappuccinos, and you finally saved $10,000. And now you're trying to figure out the best way to invest this money. Well, lucky for you, in this video we're going to go over 8 different ways you can invest $10,000 in Australia. We'll start with the low risk ways and work our way up to the high risk and high reward options. But before we get started, as always, make sure to smash the like button and subscribe if you haven't already. So the first way to invest $10,000 is to use it as an emergency fund. If you watch some of my other videos, you'll know that I'm a huge advocate for emergency funds. And I know some of you might be thinking, wait, how's that investing? Hear me out. An emergency fund should consist of 3 to 6 months worth of expenses saved up in cash. If you don't know what your monthly expenses are, start tracking it as soon as possible. Also, create a monthly budget and try to stick to it. For the average Australian, $10,000 should cover roughly 3 months worth of expenses, but everyone's financial situation is unique and it might cover more or less. Having an emergency fund acts as a financial safety net. This means when you have an unexpected financial cost come up, you won't have to rely on a credit card and go into debt. You also won't have to sell any of your investments for cash in order to cover that cost. You should store your emergency fund in a high interest savings account. Right now, the rates for that range from around 1% all the way up to 1.35%. Another way to invest $10,000 is to pay down any high interest debt you have. Whether you have credit card debt, personal loan, or a car loan, that's costing you money. Money that could be used for better investments. You can think of paying down high interest debt as like getting a guaranteed return on your money. For example, let's say you have credit card debt with a 15% interest rate. If you can pay down that debt, it's like getting a 15% return on your $10,000. Another way to invest $10,000 in Australia is to put it towards your superannuation. Not only is this going to help your retirement, it can also help lower your tax bill. If you're not familiar with how superannuation works in Australia, I highly recommend checking out my beginner's guide to superannuation video. I'll leave a link down below in the description box. So after-tax contributions are tax deductible, provided you don't go over the concessional contributions cap, which is currently $25,000. If you do claim it as a tax deduction, a 15% contributions tax will be applied to the amount. I know this tax deduction thing might sound a little bit confusing, so let's walk through an example. Meet Bob. He's a builder, and during the 2019 to 2020 tax period, he earned $50,000 before tax and he has no other income. Bob decides to make an after-tax contribution of $10,000 to his super fund. He lets them know that he's going to claim this as a tax deduction. Bob's super fund acknowledges this and taxes the contribution at 15%. Now Bob can claim his $10,000 as a tax deduction, and he does so for his 2020 income tax return, which means now Bob's taxable income is $40,000. And his contribution is now $8,500 after the 15% tax has been applied. The fourth way to invest $10,000 is low risk options, including savings accounts, term deposits, or government bonds. These options are suitable if, for example, you're saving up for a home deposit or you're really risk averse. These 3 options are usually considered safe, steady, and consistent. Let's start with high interest savings accounts. Unfortunately, in Australia right now, these accounts will only pay you around 1% to 1.35%. And most of them will require you to satisfy certain conditions, for example, depositing $1,000 into your bank account every month. I have a whole video going over some of the best bank accounts in Australia for 2021. If you're interested, I'll leave a link down in the description box. The next low risk option is term deposits. So the glory days of term deposits paying you 5, 6, 7% returns are long gone. Right now, you're going to find rates of under 1%. I personally wouldn't recommend using a term deposit for your $10,000 because if you need that money before the maturity date, you're most likely going to have to pay a penalty fee in order to withdraw it. And the third option is government bonds. When you invest in government bonds, you're essentially lending money to the government. In return, you'll get interest repayments, which are called coupon payments. And if you hold on to the bond until maturity, you'll get back the face value of that bond. Australian government bonds are considered fairly safe because the chances of Australia defaulting is rather low. But one thing to note with bonds is that if the interest rates rise, the value of your bond will decline. And if interest rates decline, then the value of your bond will actually increase. So there is a possibility of either losing or making money depending on how the direction of the interest rates go. If you want to turn your $10,000 into a small fortune, but you don't want to YOLO it all into a meme stock, your best option might be index funds. Long-term index funds have provided solid returns to investors. According to Vanguard, the Australian Shares Index saw a return of 9.4% per annum over a 30-year period. This means if you had invested $10,000 in 1989, 30 years later, in 2019, your investment will be worth $146,337. For most people, I would recommend investing in index funds if you have $10,000 because they are low cost, they're easy to use, they have historically strong returns, and most of them have good diversification. Another way to invest $10,000 is with managed funds. Now, one thing I need to flag is that over the long run, most managed funds do not beat index funds. In fact, if we look at the data of Australian equity general funds at 31st of December 2019, 61.5% of these funds underperformed the S&P ASX 200 index over a 12-month period. That increases to 74.5% if we look at a 3-year period, and over a 5-year period, 80.8% of those funds will underperform the index. But there are some Australian managed funds that will beat the index, and by a significant amount. For example, the AFIR High Conviction Fund, ticker symbol OPH, saw a 1-year return of 22.3%, and in the last 5 years, it's returned 18.7%. Also, if you value sustainability and ethical investing, there are managed funds out there that will screen out investments in fossil fuels, worker exploitation, and also gambling. For example, Australian Ethical has 8 managed funds that stick to the ethical charter, which means they will avoid investments that harm people, animals, or the environment. The trickiest part of investing in a managed fund is choosing the right fund. If you pick the winner, you'll get a substantially higher return, but if you pick a loser, you might have a lower return than even the index. You could also take your $10,000 and use it to buy individual shares. Obviously, this is a much riskier option, but you also have a potentially higher reward. If you end up picking the right shares, your return could be substantially higher than the index. For example, accounting software Xero is up 167% in the last 1 year, and the buy now pay later giant Afterpay is up a massive 640%. But remember, your investment could also easily go the other direction and end up worth nothing if the company, say, goes into administration. For example, if you had shares in Virgin Australia, your investment would be worth nothing because the company collapsed thanks to the pandemic. And last but not least, and probably the most polarizing way to invest $10,000 is to put it into Bitcoin. On one side, you have supporters heralding Bitcoin as the future of money and it will replace gold as an asset. And on the other side, you have people calling it a scam, rat poison, a Ponzi scheme. But if we look at past performance, in the last 1 year, Bitcoin has increased 850%, going from 8,200 Australian dollars to an all-time high of 70,000 Australian dollars. Now, if you do decide to invest in Bitcoin, you actually be in good company with the likes of Tesla, Square, and even university endowments all buying Bitcoin in the last few years. But you should be aware that this is a very volatile asset with price fluctuations between 4 to 10% in just a single day. Thank you for watching. I hope you enjoyed this video and hopefully you've learned a few different ways that you can invest $10,000 in Australia. If you did, make sure to smash the like button and subscribe for new videos about personal finance, investing, and saving money. As always, an important disclaimer, I am not a financial advisor, this is not financial advice. This video and my channel is for general information only. As with anything in life, you should do your own due diligence and seek independent advice.